what will happen now if you needed
Sorry about that. Just give us 1 second. We're having a small technical challenge. Robert, I can see you're back. Sorry, everybody, we had a technical challenge, but we are back.
Okay, thank you that for Naila. Sorry for the challenge. I think there are too many people who joined. So basically, just in summary, you need to make the connection with the reason why you need to save and invest. So you've said one of the reason is inflation. The other one is for retirement, then living within your means, and also ensuring that you can be able to meet your personal goals. Then the last one is an emergency fund. So an emergency fund is basically that money that will help you when things come up. Like let's say if you lose your phone and you just need 2,000 or 5,000 Kenya shillings to replace it. If you have the money, the problem of losing the phone will be a mere inconvenience. So that's what an emergency fund does to you. If you don't have the 5,000 or 2,000, you might call your friends. And you know what goes on when you have an emergency and you're calling your friends and probably they don't have the money, people start saying that friends are scams and things like that. So just to ensure that you're well grounded, you need that emergency fund. So that's very, very important. So with that kind of organization, it simply means that you'll be connected to where you are saving and investing, because you can actually see that when you save and invest, you'll have a good retirement. And you'll say that, yes, I have money, but let me plan for it. So when you plan for money, ideally to live a balanced life, you need to have three things. So first is to be able to cater for your needs, that is paying bills. Then number two is be able to live life. So probably you are going for holiday, leisure, things like that. Then finally, to save and invest for your future goals. So it's very, very important. So sometimes you hear people saying that they must YOLO. So YOLO, what YOLO misses is that you can still have fun $500 Kenya shillings and you don't have it. Just remember the day that you are YOLOing 2,000 Kenya shillings. So probably you should have taken 1,000 and saved 1,000 for tomorrow. And again, during retirement, when we'll be, let's say 60, 70 years old, is the money that we save now that will help us. So from a financial planning point of view, always look at the money that you receive and try to use it to do three things. Pay your bills now, which are maybe frequent. And then number two, be able to live life. So do you have some sort of leisure somewhere that you go? Because you can't work 24 hours, 7 days in a week. And again, what are these goals that you have in future that you want to cater for? So do you want to go back to school? What is it that you want to do? So you need to write down those goals, write like 10 of them or even 20, and then give them timelines that you want to achieve them and see the financial implication. So from there, you'll be able to prioritize. So once you have that clarity, saving and investing, it becomes self-driven because you need to drive yourself. There's a lot going on. There are people who need your money. There are things where you do want to spend your money. So if you don't have a strong foundation, then it becomes very difficult to save. And people who have been working will tell you that it's actually possible to work for 10 years and be not able to save. So we'd say that even someone who was working and was earning 100,000 Kenya shillings per month, they should have just saved 10,000 Kenya shillings per month. But ask them 10 years or 15 years down the line, most people would tell you that they don't even have 100,000 somewhere. So life moves so fast. That's why it is important to have that ground from a financial point of view. Then the other thing to look at when it comes to investing is that the source of money for most people will be their career or business. Because of that, you need to be investing in your career. Like my background is in technology, and after school, I had to invest in a professional course that was worth 200,000. And after doing that course, I was able to get a salary increment so that I got that money back in less than a year. So that's an investment that you make, but rarely people look at it that way. And the same to people who are in business. If your business is moving to the digital space, you need to invest in digital skills, digital marketing, look at social media, have a LinkedIn profile. So that will help you to be able to grow the value that you create for your people. And that is very, very important. When you are creating more value for your customers, they'll be able to pay more. And that way, the revenues and cash flow for your business will grow. So investing is not just in the financial markets, but in the source of income that you have. So the business, the career, so you'll get promotions and you move higher in the ranks. And as you earn more, it's important to ensure that you're able to save and invest more, because that will move you closer to your future goals. So if you look at the age that most of you are in, I would say that the biggest thing that you need to master now is what we call compound interest. So the idea that once you save and earn an interest and you reinvest that interest will earn you more money in future. So like for example, if at the end of year one you have 100,000, you'll earn an interest of 110,000. So your principal for year two will be 110. And with the same 110 now, you'll be able to have a total of 121,000 next year. So it goes like that and it grows. And the advantage you have is that with age, you have a lot of time to save and invest, and you'll be able to build a bigger portfolio over time. So that realization, it doesn't occur to so many people. And if I look back, I always say that's something that I should have done more. And more people, most working class people will tell you that that is something that they regret. As much as they can't change anything now, they regret not having started to save maybe at age 20, 25. Some people start at age 30, 40. So that's an advantage that you have. So the clarity that you need to have is, what do you want to do? Which career are you in? What business are you going to do? And how do you grow it sustainably? So if you are a medic, what do you require in that field? Do you require an extra course? Is it a professional course? And what are the emerging trends in that profession, so that you can become more valuable and offer more value to the customers or the people who need services in that industry? So as you keep on doing that, you'll be able to earn more. And as you earn more, you're able to save more. So that value chain is very, very important for you. So the mindset is what we've been talking about so far, just working on your mindset and making that connection. But the reason why the Nairobi Securities Exchange is there is that it gives us some of the vehicles for investing. And so because of that, it's very important that you understand financial markets. So financial markets deals with regulators. We have financial services providers. You have market intermediaries. You have individuals like investors. So it's very, very important that you understand financial markets. Who are the regulators? That's very, very important. So for savings, most people will start just with having a bank account. So you'll have a bank account where you can receive your salaries. Or if you are starting a business, you need to select the bank that would serve you best as someone who is just starting out. Are they available for your calls? Can they give you advisory? Can they support you? Is very, very important. Again, for salaried people, what products do they have? So once you have that is usually the first financial account for most people. And there's also M-Pesa. So you need to know what is it for. And then as you get this money, there's part of it that you want to set aside for the long term. So you can start with instruments such as SACCOs, money market. And as you get sophisticated, now you look at the stock market. So the stock market, like you've been told during these sessions, is a long-term game. So you need to have money that you need in the short-term investment vehicles such as money market funds. And money that you need to spend today probably needs to be in M-Pesa or a bank account. Then for the long term, you look at companies that will matter in the days to come. Because as an investor, you're basically someone who believes that the future gonna be bright. So you need to look at those companies, and then as you look at them, look at the financials, look at the reports, and consult. Be in communities where you can ask those intelligent questions, like, say, I've read the reports for Safaricom, Equity, or KCB, and this is what I've seen. What do you think? That's a very intelligent question. It means that you're not just relying on other people to tell you that buy this and thank me later, because that could be something that is not based on any fundamentals. So look at the strong companies, look at the sectors. There's Kenya National Bureau of Statistics. What do they say about that sector? Talk to people. If you go to the branch, talk to the teller. You'll get insights if you are curious, because it is your money that you are putting in the investment. It's important that you get interested in what is going on. So as long as you master that art of the flow of money, that it comes from entrepreneurship or career as a profession, then investing it in an instrument, and in investment, it is time that will pay you the best reward. So once you are in that journey, then it becomes natural. It will be as natural as the air that you breathe. And the few people who have figured this out, they really enjoy and have fun in life. Because, for example, we are in the festive season. If you've gotten an interest of 100,000, the holiday of 30,000 is enjoyable, is fun, because you've gotten it from interest from your investments, and you'll reinvest the rest the next year. Again, you'll have more. So you can see their life, quality of life tend to be better. But this is based on personal decisions, and we all have the opportunity. They usually say that investing is one of the highest forms of freedom, because actually you have the freedom to make your life better, to improve the quality of your life, and make your money work for you. So thank you very much. I'll stop there and take any questions that you might have. So someone is asking the name of my company. It is Abojani Investment.
All right, thanks so much, Robert. That was great. I hope people have been noting down their questions about personal finance and even career that you may want to ask Robert at the end. So for now, I'm going to hand over to Faith, who's going to take us through the stock market. So Faith, you can unmute.
Hi, good evening all, and welcome to the final stock market challenge session for young investors. In this part of the presentation, we will discuss a wide variety of topics, from the best stock options currently in the market to advice I would give to a 20-year-old. My name is Faith Sang, a research analyst at AIB-AXYS Africa, currently leading periodical coverage of NSE-listed equities and fixed income. I do have a background in Bachelor of Science Statistics and currently a CFA candidate. I will be taking you through this second part of the session, so please jot down any queries you may have, and my colleagues and I will be happy to answer. So without further ado, let's jump right in. Please allow me to share my screen. Just let me know once you're able to see it. Naila, could you kindly confirm whether you're able to see my screen?
Yeah, we're good.
Okay. So my colleague Robert has given us some brilliant insights on importance of financial planning, savings versus investments, and types of investments currently being offered in the market. I'm here to expound a little bit more on investments in equities. I'm cognizant of the fact that making recommendations without facts backing it is baseless. So here are some reasons why I recommend investments in the equities market. Over time, as Robert mentioned, the stock market is the greater generator of wealth due to higher returns through capital appreciation, dividend payment, bonus and rights issues, and so on and so forth. Another advantage of investing in the NSE is the ease of buying and selling. The stock market is highly liquid, unlike investments such as land and real estate. It can also be used as loan collateral and can help in estate management as share ownership is clearly defined. Looking at the graph on your right, we can see the 10-year price movement of four securities currently listed on the NSE, that is Safaricom, Bamburi, Equity, and AIB-AXYS. Safaricom has been the standout performer, driven by growth in the M-Pesa business on a year-to-date, or rather a 10-year basis. Only fair to mention some of the risks associated with investments in the equities market. Day-to-day fluctuations in the market is likely to affect returns from a stock. Nasty decline might trigger investor sell-off, taking down with it good performing stocks. This, however, can be mitigated by diversifying across various securities. Another risk of investing in the NSE is business risk. So you should be aware of going into, this is a risk that you should be aware going into the equities market investment. A company going into liquidation or closing down operations is likely to negatively affect investor confidence and lead to panic sell-offs. This can be cushioned by conducting proper due diligence to ensure that the company you're investing in is fundamentally sound. Another risk of investing in stocks is regulatory risk. Regulations imposed in different industries such as BAT and AIB-AXYS can cause sell-off by investors, affecting counters negatively. So one way of cushioning this, or rather mitigating this, is diversification across various securities. Another risk of investing in the NSE is social and political risks. So as we've seen recently with the onset of the Russia-Ukrainian war that began in February of this year, and the zero COVID policy in China that has caused supply shocks across the globe, has causing exit in emerging markets, counters by foreign investors, causing increase in foreign sales in the local NSE. So that's a risk that you should be cognizant of going into investments in the equities space. So looking at the 30-year performance of NSE 20, taking into account various social and political events that occurred, we see stellar performance throughout, especially during the early stages. Therefore, if asked when to start investing, I'd say mapema ndio best. Translated to the earlier, the better. Now let's look at some of the uncertainties currently experienced in the market. The graph seen below shows inflation numbers as reported by statistics bureaus across the globe. Elevated global oil prices, geopolitical risks, and financial market volatility has contributed to high inflation numbers recorded worldwide. Back home, we saw inflation drop 90 bips in November to 9.50% from 9.59% recorded in October. We do, however, expect sustained pressure going into the festive seasons. We do expect sustained pressure, inflationary pressure, and we do anticipate inflation being above the CBK set target of 7.50%. So let's look at 2022 year to date from a glance. So 2022 has seen the emergence of overlooked counters, mostly in the manufacturing sector. mainly driven by corporate factors such as dividends and bonus issues. On a year-to-date basis, NCBA Group's counter gained the most by 35%, attributable to increased investor confidence after the announcement of the 2 shilling dividend in half year of 2022. We expect a dividend payment of between 4 to 5 shillings in the full year 2022. Limuru Tea has gained 31% on a year-to-date basis, mainly due to increased investor confidence after proposed 100% stake acquisition by Ikaterra Tea in July 2022, albeit pending regulatory approval. Williamson, on the other hand, gained 23.08% on a year-to-date basis due to its consistency in payment of dividends. So looking at the NSE top 5 losers on a year-to-date basis, Centum Investments leads the pack, having lost 42.39% on a year-to-date basis, mainly attributable to increased loss from real estate operations. Nairobi Business Ventures was a close second, having lost 40.14% year-to-date, mainly attributable to loss of investor confidence due to its ambiguous business models. Foreign investor exits have driven the general decline in Safaricom, though we still view Safaricom as a buy, given its growth prospects and expansion to the Ethiopian market. So maybe we can get a bit personal here. A little nugget of wisdom I'd tell a 20-year-old is take a long-term approach when making investments. And also you're also not too young to start investing, just as Robert has mentioned. Always keep an eye out on overlooked counters. Most investors focus on counters in the banking and telco industries, but it is also important to be on the lookout for under-the-radar counters previously overlooked by investors, such as Olympia Capital and Limuru Tea, at year-to-date gains of 33.2% and 31.3% respectively. When selecting stocks to invest in, consider dividend-paying stocks. I'd recommend reinvesting your dividends, just as Robert has mentioned, because compounding over the long term is more profitable. As cliche as it sounds, buy the dip. Investors should take advantage of the foreign exits by taking up positions at the current low valuations. Consider the fixed income market. Treasury bonds and treasury bills offer stable, periodic, and risk-adjusted returns that can be reinvested in other asset classes. It is also wise to avoid any dead capital. This ideally refers to investments that take up much of initial capital with no frequent returns, such as purchase of idle lands. Finally, research is key. Always conduct proper due diligence on a counter before making any investment decision. Now, let's talk a bit about the stocks I'd recommend as a buy with the current prices they're trading at. NSE currently has 63 listed counters across 13 different sectors, spanning from banking to telecommunications, manufacturing to agriculture, insurance to exchange-traded funds, among many others. Stated below are my top 5 picks. From banking, I'd recommend a buy from KCB, given the strong Q3 2022 earnings release that saw the bank propose a 1 shilling interim dividend. The acquisition of Trust Merchant Bank, DRC, popularly known as TMB, is a positive revenue generator for the long term in line with the company's growth vision. The second stock I'd recommend a buy on is Safaricom from the telecommunication sector. Share price has dropped to below our target price of 35.25 shillings, providing an opportunity for local investors seeking entry positions in the market at lower prices. The introduction of bank to M-Pesa charges set to commence next month will drive Safaricom's share price upwards. I'd also recommend a buy on Jubilee Holdings and CAR in general, given its steady growth and dividend payment. From the manufacturing sector, I'd recommend a buy on EABL. The recent buyback announcement by Diageo at 192 shillings a share implies undervaluation of the counter. Therefore, from today's session, we have learned the importance of planning types of investments, investment in the Nairobi Securities Exchange, and what to look out for when investing. The next logical step is to start investing. How could you possibly do this? At AIB-AXYS Africa, we provide a platform and expert trading advice via the AIB DigiTrader that allows investors to open CDSC accounts online, fund and trade anywhere and at any time. It's simplified navigation, secure transactions, and easy order placement, and it's the most preferred trading platform Kenya in 2019. Investors are able to access various reports such as portfolio valuations, transaction statements through the platform. As part of our value addition services, clients, or rather any interested party, is able to access stock recommendations and weekly Q&A sessions with expert analysts. So you will be able to access any stock recommendations or weekly trading ideas or any fixed income notes or equity notes that the research team works on every week. You can access this via the website. Also, every Thursday, we do have an open Q&A session where anyone is free to ask any questions with regards to the NSE market or any fixed income or anything with regards to the fixed income market. So with that, I'd like to close it there. And in case you have any questions, please drop them on the chat. And when it comes to the Q&A, my team and I will be open to answer any questions you may have. Thank you.
All right, great. Thank you so much, Faith, for that. I'm sure there are lots of questions that people might have. So please write your questions in the chat. I can see some people have already started writing, and then we'll give some minutes for questions. After that, the official event will be over, or the official meeting, but we'd like to hear from, I'm sure the participants would like to hear from one of the top participants, who is Mercy, who will be joining to just give us some strategies that she used during the challenge to make the amount of profits that she has. All right, so please write your questions in the chat, and then we'll be attending to them in about a minute. Keep the questions coming. About 30 seconds. All right, so we have quite a few questions. I'm going to take us through them. Robert and Solomon, who is our senior research analyst at AIB, will be attending to the questions. You can continue to write. Solomon and Robert, I hope you can hear me. Just let me know.
Yes, I can.
Unmute. Okay, great. Thanks, Solomon and Robert. All right, so we'll wait for Robert as I ask the questions in the chat. Okay.
I'm here.
Okay, great, thank you. Regarding, Nixon is asking, can you recommend the buy of Olympia Capital? I guess that goes to Solomon. Solomon? Okay, as Solomon works to unmute himself, Robert, someone is asking to repeat or maybe expound on what you said about investing and compound interest.
Yeah, thanks for that. So basically what that means is that over time, if you invest and you are investing the interest, your money will grow simply by the fact that you're investing over a long period of time. So I can use a number that is easy to follow. So let's say you have 100,000 and you're earning an interest of 10%. So by the end of year one, you'll have 110,000. So if you don't withdraw that money and let it still grow at 10%, by the end of year two, you'll have 121. Then by the end of year three, you'll have 133 like that. So the 100,000 that you initially put in, within 3 years, it will have given you another 33,000. So by year four, it will be 146. And as you continue, that money will grow, it will double. So over time, as long as you're investing consistently, your money will grow exponentially. And that's the biggest idea about investing. And it's not just in the financial market, it goes to careers, business. As long as you invest and you keep going, over time, you'll be able to see that compound interest favors those who are consistent.
Great, thank you. Solomon, I had asked about Olympia Capital.
Yeah, before I move to Olympia, maybe to add to what Robert was saying, in terms of compounding, you can also look at it in form of, once you've invested in your paid dividends, don't eat the dividends. So always make sure that you have reinvested back the dividends. So if you have invested in your paid dividends worth 2,000 shillings, make sure you buy either the same counter or other counters to make sure that your money is in circulation, because that means that in the next dividend payment cycle, then you'll be paid even higher dividends, which you'll reinvest back. I think we had a conversation recently with one of the key investors of the NSC, and they had said that in their 40 years investing in the NSCs, they've never eaten, or let me use the word eaten a shilling of their dividends, they always invest it back. So imagine doing that for a period of even, let's say, 5 to 10 years to be a very good element of compounding. So on the question on Olympia at the moment, it's not within our coverage, so we are not adequate in terms of fundamental analysis on the company. But from the technicals, currently it's one of the top gainers on a year-to-date basis. And from where we see it, there is nothing fundamental driving it. We see it as investors' demand and supply. So at the current price, I would say it's a good speculative buy, but I wouldn't look at it in terms of long term, because if you look at the businesses they engage in, they're mostly into investments. They have rubber and tire manufacturing, and some of those businesses are not long term, I would say. They are the businesses that are likely to be challenged by innovation and new activities in the world. So maybe have it as pure speculation, and it's not a long-term buy.
Okay, great.
Yep.
Thank you for that. There are some questions on AIB DigiTrader, so I'll just take them quickly. To open an account on AIB DigiTrader, you'd simply download the app from any app store and go to open new trading account. Once you put in your details, you receive your CDSC account, which is an account that you need in order to invest in shares in Kenya. So you receive your CDSC number and the login details via email. Actually, when you open the account, you put in your preferred login details. So once you receive your CDSC number, and that means your account has been approved, it's been opened, so you can log in. The brokerage fees is 200 shillings per year to use the platform, and a 1.64% trading commission on every trade. So for example, if you buy shares worth 1,000 shillings, that means you pay 1.64% of that extra as a fee. So 1,016 shillings is what you'll pay to buy those shares. So that's actually the lowest fee in the industry. So let's move on to more questions. Robert, this one is for you. You talked about investment options in money market funds. What's the difference between this and investing in stocks? Or when should you start investing in MMF versus a stock? And maybe give an example. Robert?
So yeah, so I would say that when you look at your portfolio, so part of personal finance is to understand the idea of a portfolio, looking at long term and short term. So there's this money that you need to earn an interest in the short term. So that ideally shouldn't be in the stock market. So that's where money market funds come in, and also building a consistent saving culture. Money market funds, they are some of the best vehicles for that when you're just starting. So it can enable you to save consistently. Then from there, you can have good capital to invest in the stock market or other instruments. So locally, they're regulated by the Capital Markets Authority, and I'll give you some of the top 5 funds. We have CIC Money Market Fund, Britam Asset Management Money Market Funds. You have ICA, Lion, NCBA, Sanlam, and there are several ones. So that list is available on the Capital Markets Authority's website under the licensees. So it is always updated every 3 months or even more often than that. So with that, now you can see which options you can go for and from which financial services players. So in their respective websites, they'll have what they call a fact sheet, and you'll see how to go about it. But generally, the capital need is about one is between 1,000 to 5,000, depending on the fund. Then you can always update with as little as 1,000 Kenya shillings per month. So it's a very good money bucket where you can put in any money that you get. And generally here in Kenya, they've been earning interest between 8 to 11%. So that interest is earned daily, but paid monthly. So they're quite popular because of that, in terms of helping you setting up an emergency fund, short-term needs. Like let's say you have a goal of investing 60,000 Kenya shillings in the stock market next year, or even setting up an emergency fund, or having that money for a holiday. So they'll help you with that. So check the Capital Markets Authority's website, look at the various funds, then now you can go to the specific websites. But on top of that, you can always contact us at Abojani. On our Twitter page, you'll see at the Abojani. So we answer such questions. If you ask us, we'll share with you link and give you the information. You can also join our Telegram group for assistance. And I think there's one that targets students. It's called Wanafunzi, if I'm not wrong. Yeah, if on that list, you'll just see it. And there's some that these days have come, you can even be fully onboarded on mobile or USSD. So just to have the curiosity and do your due diligence and ensure that the company and its funds are regulated by CMA. So that's the biggest thing that you need to know first before you can get into any, because there can be so many things online. But make the CMA website your friend if you want to invest in money market funds. Thank you.
Great. And Solomon, could you please break down the important aspects that one needs to look at in a company's financials when choosing a stock to invest in or company to invest in?
Okay, so depends on which company, because various companies from various sectors have different structure in terms of how their books look like, the income statement more so. The balance sheet is probably the same across the board, but different companies have different looks. So for those who attended the physical meeting we had at NSC, I think we discussed that in bold, but there are some key items that you look at, because as investors, most of the time, once you've read in the news of, you've heard that the company has made profits, then you're happy with it. And anybody can make profits. Profits are there to be made. So it's not all about making profits. There are some other underlying items that you can look at. The first one is, there are some few ratios you can compute. First of them is the margins. You can do the gross margin, that is the revenue minus the cost of sales, you get the gross profit. You can do that. The gross profit is a percentage of revenue. You can also do the operating margin, that is now the gross profit minus the operating expenses. Then you divide that by revenue. And then you can also look at the operating expenses as a percentage of revenue. You can also look at the growth in terms of year on year for revenue, for expenses, for tax, for other non-finance items like depreciation, and also for profits. And for something like banks have a different income statement. You can look at the growth in income from interest, from loans, from government securities, the cost of funds or the money they are paying to mobilize their deposits, that is the interest paid to depositors. And you can also look at the non-interest income, that is the income from fees and commissions, from forex trading and all that. And then another line item that is very important for banks is impairment provisioning. So when a bank gives you a loan, there is a chance you might not pay it back because something might happen. And so depending on what kind of a borrower you are, the bank makes provisions or sets aside some money with an eventuality that you might not pay the money. So based on the risk profile that you have, or the general risk profile in the market, the bank usually have what you call impairment provisioning. So this was not something that was keen people looked at until COVID came and all the banks increased their provisioning. And when a bank increases their provisioning, then it means it's an expense. So that means it's reduced profits. So actually some of the profit you're seeing in the banking sector in 2021 and even in 2022, it's not actual money or revenue. It's just that some of the money they had set aside during the COVID period in terms of provisioning is being freed back into the books. So then it reduces the expenses, and then naturally the profits will go up. Then on the balance sheet, you can look at of course, the receivables. Company like Kengen, the receivables have been growing because KPLC has not been paying up. And then you can also look at payables. You can look at the equity component. That is depending on if they pay dividends, the retained earnings, how it's growing. And finally, you can also look at generally how the assets are growing. And you can also do an asset turnover whereby you divide by the revenue to see the contribution. Also on the non-current assets, you can also look at the physical assets, that is like land, property, buildings, machinery, and all those. There's something we call capital expenditure, CapEx. So for companies that are in manufacturing, telco, capital expenditure is very, very important because it means you're investing back into the business. And then for companies like insurance, you need to look at the premium growth. So once you pay a premium to the insurance company, it comes in as a revenue. So you need to look at how the premiums are growing, maybe on a year-on-year basis. And also you can look at how much they are paying out to claims. So that then will inform if this company is profitable, looking at the claims ratio. Yeah, so that's just a general outline on how to, or what to look out for in terms of company financials.
All right, thank you, Solomon. And if you're a layman and you don't want to, maybe you're not able to look at the financial statements, would you still advise someone to invest, and how do they get the information that they need?
Yeah, so I know most people do not have an accounting background, and for even some of those who have it don't really get the numbers, or they're not able to break them down. So what I would advise is that we give you a link to our WhatsApp channel. So every time there is an earnings releases, Faith, myself, and the other team of analysts that we have, we usually break down the numbers, trying to simplify them to numbers that are digestible and easy to understand to investors. And we also try to pick out the most important things to look out for. So you can join the group. And actually, we're not in the earnings season at the moment. The earnings season is coming from March next year. So you'll be able to see the full benefit of having a person who understands the numbers break them down for you.
Okay, awesome. Again to Solomon, and then I'll go to Robert for our last 2-3 questions. So Solomon, what is an ETF, and how can someone invest in ETFs?
So an ETF is what we call an exchange traded fund. So it may sound like a very foreign concept or very difficult concept, but basically it's, as it sounds, an exchange traded fund. So you find that there are listed investment products, ETFs. So they track the performance of a basket. Okay, so there are various asset classes that are put together, like let's say shares, bonds, commodities, indices like NSE 20, NASI or share index, NSE 25, all those. So you can put them together into a basket, and then you can track the performance of those shares or bonds or commodities. And then, or even it can be a single commodity, like oil, precious metal, like gold. Like the only ETF listed in the NSE at the moment is Absa New Gold ETF. So it's also close listed in the Johannesburg Stock Exchange. And so it tracks the performance of gold in terms of everyday performance. So ETFs are just like normal shares, whereby they offer you liquidity in terms of trading. The process of trading is similar to what you have for shares. Open a CDS account, place your order, get the buy order. Once you've made your profit, you come back and maybe you can sell it. And then they're also, I would say, they are backed by the constituent underlying asset. So that basket of asset classes or shares or commodities that is tracking is what we call the underlying asset. So based on the performance of that underlying asset, either the shares, the bonds, the commodities is what informs the performance of the ETF. So I know the ABSA New Gold ETF is one of the best performing in the last month and one of the most traded also in the last month. And that can be attributed to the increased risk in the market has seen investors hold their wealth in other forms of exchange. So you find that investors are now holding their wealth in gold or in other precious commodities. They're also holding them in USD. So the fact that the demand for gold has gone up, then you find that the ABSA New Gold ETF has also performed well because there is demand for it. Because the demand for the prices, the global prices for gold move in tandem with the ETF performance. Yeah.
Okay, great. Thank you for that. So because of time, I want each of you to give your last words. So Robert, you can start, and then Solomon. After that, it is the official close of the meeting. However, for the participants in the challenge, you can stay behind to meet Mercy and also to hear from her the strategies that she's used during the challenge.
So first of all, thank you very much, Naila and the AIB team and the NSC for this opportunity. So I would tell the people who are here that we are in very interesting times. And when you look at the young people from a career point of view, we have very emerging careers and new skills that you can take advantage of, which would give you an advantage when it comes to the markets in terms of what you can earn. And also for those who are interested in entrepreneurship, we have a relatively young economy and ecosystem where there's some of problems that you can solve that are very scalable. So I wish you well in your journey. And as we say that an investor is basically someone who believes that the future is going to be bright. And for sure, the future of Africa is very, very bright. Thank you.
Thank you, Robert. And Solomon?
Yeah, for me is, I know we have a couple of questions you have not answered. So what we'll do, hold the questions. Once you've joined our group, we on Thursdays we usually have a Telegram channel whereby we interact with the investors. So on Thursday, we are going to open the channel, come and ask us the questions. We think we'll have more time to interact because it's open from 8 a.m. to 6 p.m. So you can ask us all the questions that you feel have not been answered today, or the ones that might come up as you digest what you have talked about today. Now, on my closing remarks is that I would like to maybe talk to the young investors and tell them, you do not need a lot of money to start investing in the stock exchange. So don't wait for the time at utaomoka or you get your first 100,000 to start investing in the NSC. So it doesn't demand of you much. You only need to buy 100 shares. I will just say in simple terms, you need around 300 shillings to start investing in the NSC stock market. And for those who have participated in the NSC challenge, I think I've been able to see the dynamics of what to do, what to avoid, how to go about buying, what to look into and all that. And for those who have not done it, I would encourage you that once the next one opens, make sure that you have registered and participated, because this is a free opportunity for you to learn about how to participate in the market without losing your money. Yeah, yes, there's money that you're given, virtual money, but it gives you a chance to experiment with somebody else's money and lose or gain without necessarily losing your own money. So take up the challenge, start actually today. You can download the AIB DigiTrader app. Easy to set up. You need your ID, your bank details. Within 5 minutes, if you're done, send it to us. Within 24 hours, you've approved it. By tomorrow, close of market, you can be doing your bidding. So it's not a big process. And I know there are sometimes you usually go out there and spend some money on your own leisures. So you can try sacrifice some of those leisures, try investing in the stock market. You can have a dedication of buying 100 shares every month. For the next 1 year, you'll be a solid NSC investor. You'll have lost some money, you'll have gained some money, you'll have been paid dividends and all those. So it's a good opportunity. Join the market. It's trading at its lowest valuation. Most of the counters are trading at their low, so it's a good time to buy into the market. So thank you for setting aside your time and joining us this evening.
All right, great. Thank you so much, Robert, Faith, and Solomon. So thank you for all the young investors who joined us for this session. We had quite a few sessions. We had a lot that we also posted on the the Stock Market Challenge 2022 WhatsApp group. For the participants, we had engaging question and answer sessions almost every day. So for those who would like to join the next challenge, please keep an eye out on our social media handles. It's a great opportunity in 3 months to learn a lot, all for free. All right, so for the participants who are left, Mercy, I know you've joined. Perhaps you can unmute. You can just let them know maybe what you're studying, which university you're in, and how much profit you've made so far, and share the strategies that you think would be useful for them to use as the challenge comes to an end. Give me a second to unmute you, Mercy.
Hello, good evening, everyone. Can you guys hear me? Naila,
Yes,
hey.
yes.
All right, great, thank you. Mercy Kipruto, and I'm a student at the University of Nairobi. I'm studying economics and statistics, 4th year, and I've also done investment and financial analysis. That is a professional course offered by CASNEB. And about the stock market challenge, I'm currently at position 4 with a profit of around 200 and something plus. So my total portfolio is worth 300 and close to 13,000. And what has worked for me majorly, first of all, I had to look at the investment horizon. I saw that since the challenge was taking place within a span of 3 months, so I had to strategize and look for the strategies that would suit investing within a span of 3 months. And frankly, technical analysis is what worked for me. That is digesting the charts, the price movements. And I used the strategy that I majorly used was swing trading. That is buying low and selling high, within a span of 2-3 days. And it also consisted of keeping a close eye on the movement of stock prices. So that would mean I would buy low maybe today, then make sure I sell the stock tomorrow. And also someone would ask how much time I'd invest per day on the trading platform, and majorly I'd sign into the trading platform around mid-morning when the biggest movements happened within, a short period of time. Then also I employed the stop loss strategy. That is, I wouldn't really hold a stock that went against my predictions for so long. So I'd rather sell it and stop loss than buy another stock. Another tip I'd also like to give out to my fellow students in the competition is using the market screeners, and those platforms usually offer, sites for charts, the latest company financial news, and also they have pretty much everything one would need to conduct technical analysis on a given stock. And as Solomon had said, the last time we met at the exchange, no one has really, ever made a huge benefit from employing short-term trading strategies in the real market. And given the competition was a simulation of what happens in the real market, I feel like as investors, as young investors, we really should combine both technical analysis and fundamental analysis from what we've been taught by the AIB-AXYS and Abujan investments in the real market. And as a finance student, listening to some of the best investors giving talks on investment and financial analysis, this has made me realize that classwork really takes a huge place in the real market, and what we learn in class should not be only used for passing exams. And I participated in the challenge last year. I was top 10, and I opened held my hand. I've been attending the talks, and my portfolio, my real account portfolio, has grown. That is thanks to AIB. And as young investors, I think we're always looking for chances to secure financial futures. And there's really no better place to start than with place or time to start with the AIB-AXYS, their stockbroker. And as I said, they've enlightened my growth and deepened my understanding at investment and financial analysis. So I think that would be my vote of confidence to open an account with them and start trading. So happy trading, everyone. Thank you, Naila.
Thank you, Mercy. Thank you, Mercy. That was really, really interesting. I'm sure the students have learned a lot, but we'll have more. We'll want to hear from also the top 7, just to hear from them in the award ceremony. So don't worry about that. But thank you, Mercy. That was great. All right. So we've come to the end of our session. Thanks, everybody. As Solomon said, if you have any questions, we usually have a Telegram group. I'll put the link in the chat. You can join on Thursdays for the Q&A. It goes on the whole day. Any questions that you asked will be answered in real time. So feel free to join on any Thursday. And of course, we have our social media channels, YouTube, Twitter, which also have really good information. Abojani as well. You can look for Abojani Investment online as well. All right. Thank you, everybody. Have a great evening. For the participants, we'll see you on the WhatsApp chat.